Where's the deal? I got to get a deal. No, that's the last thing you should be doing. The very first thing you should be doing as a passive investor is, where's the sponsor? Maserati Mike, what kind of sponsor is he? Has he ever done a deal? Have you done a background check on him or her? How long have they been in business? Have you spoken to any other investors that have done deals with Maserati Mike? You have to look at the sponsor first. We call it the jockey. Most important thing. That's the first thing you need to do, is to be able to vet the sponsor.
Welcome to the Real Estate Mogul MD podcast. Thanks for tuning in and taking control of your financial future. This is a show where we not only motivate and inspire, we give you actionable real-world experience to help you live life by design. You'll hear journeys and stories from other physicians, investors, coaches, consultants, and entrepreneurs. And now, here's your host, Brett Riggins.
If you've considered investing in multifamily real estate, specifically limited partnerships for passive income, you are going to love this conversation. Today's guest has grown his real estate portfolio to over 2,000 multifamily units, which is more than $250 million in assets under management. They are now teaching other people to do this safely with what's called a three-step framework. You're going to want to listen to this. Had a great conversation. Their students now have closed more than 68,000 units worth more than $4 billion in deal volume. And he has also tracked that they've allowed more than 100 students to leave their W-2 jobs. Absolutely love this. What a great conversation. He's an author, family man, just a great, genuine guy. This is the co-founder of JakeandGino.com. Everybody, please welcome Gino Barbaro to the show. Gino, the time has come. Here you are. This is everything you dreamed of. I know it, right? You told me you were not nervous. You were ready to go. I'm just joking with you, man. Welcome to the show.
Brett, I am excited to be here. I'm going to share some trials, some tribulations, as well as hopefully some success stories. How you doing today?
It's awesome, man. I've never been better, and it gives me goosebumps to say that because I wholeheartedly believe it. Today is always better than the day before. How about you?
I concur. After reading history and seeing what we were, where we were, I think anybody that says we're much worse off today than we were generations ago, I just don't, I think I don't want to call it delusional. I just think that that's their paradigm. I think we've got so much opportunity right now. You just need to tune off the world and you need to start focusing on your life and how to make your life better.
Yeah, it's perspective. And I literally have that written on my board. To make quantum leaps, perspective is the obstacle. And for that person or those people who may be saying that, Gino, what are they looking at? First of all, what are they selling? Who are they selling it to? And that is the perspective of the information presented. So I know they're not looking at me because I've never been better, Gino. I'm so happy to have you here as well, too. And before we go too far, I'm really excited because, before we record these episodes, I get the chance to do a little background research and learn a little bit about our guests. And wow, you have an amazing platform that you have built. So please let the listeners know just a little bit about Gino.
Just like everyone else, it did not start off, as you say, amazing. It was a slow grind. I got into the restaurant business years ago, Brett, with my family, and I loved it. Until I didn't love it. In 2007, my dad passed away, and I had been working with him since I was 7 years old. And we had the restaurant for years and years. And we all know what happened in 2008. All of a sudden, I'm saying, Brett, am I living my dad's dream or am I living my dream? And I had to be honest with myself. I sort of started hating working at the restaurant because I missed him. He wasn't there anymore. I think I liked the restaurant because it just reminded me of him. I loved working with the family. I loved having the culture of the business, that small business feel. And when he was gone, I just didn't feel it anymore. And then one day I just pick up the book by T. Harv Eker, The Secrets of the Millionaire Mind. And I'm like, dude, this guy's an asshole. But then I read it again. I'm like, no, I'm the asshole. Remember perspective?
Yeah.
I'm the obstacle. Everything he said in the book was true. I had to claim responsibility once again for my life. I was blaming everyone else. Obama stunk. Bush stunk. The economy stunk. Well, I think Gino at that time, his way to create value stunk as well. One line that really hits it home for me in that book is when he says, your fruits are in your roots. Well, the fruits is the money of the results. That's what you see. My roots were pretty shallow. They were pretty weak in 2008. I didn't have the skills. I didn't know how to become a better investor. I didn't know how to create additional value. And once I started to learn that, and thankfully for me, right after that, I started joining mentorships on how to invest in real estate, how to get into multifamily. I met Jake in 2009, and we started partnering up. 2011, he left New York and went to Knoxville, and then we started looking at deals in Knoxville. It took us 18 months to find that first deal. But if it wasn't picking up T. Harv Eker's book and claiming responsibility and learning and actually becoming valuable to Jake, and Jake becoming valuable to me, I don't know if I'd be on this podcast right now.
Wow. Wow. And the Jake that you mentioned is the Jake of jakeandgino.com, right?
Jake is my business partner. He is the pharmaceutical rep turned, I would say, real estate mogul. He's just an amazing partner, amazing dude, hard worker. Our values aligned from day one. We both knew what we wanted. We're both hard workers. And I am the Gino, the pizza guy. So you got the pizza guy and the drug rep getting together, buying multifamily back in 2011.
Pizza and drugs. And how does that relate to real estate? Very cool. But you mentioned T. Harv Eker, and I'm also seeing this other list of names. Robert Kiyosaki, and I'm sure a few of us are aware of that name, Grant Cardone, Brandon Turner, Michael Gerber, and Chris Voss. And these are guests that you've had on your podcast, of which has 5 million downloads. Congratulations on that. Holy cow.
Thank you. And we've been doing the podcast since 2016. It's been a slow grind, but people always ask, why'd you start Jake and Gino? And I would selfishly say in the beginning, it was to make money, to monetize. That's what the goal was with education. What I really found out was it was my passion, number one. I truly love helping people. Our students have closed over 80,000 units. 125 have left their W-2s. They've raised over $450 million. But more selfishly, I just wanted to be a coach. I became a certified life coach back in 2014, and that was where my passion lay. But even more importantly, all of those names that you mentioned, how much would I have to pay each one of those individuals to be able to be coached or mastermind with? Thousands and thousands of dollars. And every week, Jake and I are able to step out of our business and we're able to interview an expert, whether it's somebody from a property maintenance company, whether it's a property management company, whether it's an accounting service, whether it's a tax attorney, an estate planner. We're interviewing these experts every week, and it's helping our business. So not only are we selfishly trying to monetize on the education, which is what we should do, but more importantly, we're growing our business and we're becoming much better investors where we're able to share on the platform as well.
That's awesome. And my favorite, Mr. Jim Rohn, I believe there was some line that he said about learning when you teach. And that is so amazing. And that's also remarkable. The other thing, though, and you talked about getting in your own way, like blaming other people and finding this self-realization point with a shift. Look at now who you've become in order to be where you want to be, do what you want to do, but sit in the room with these types of experts and grow. I mean, you have to be teachable. You have to be genuine. You have to be able to connect in order to bring that value out to, and exponentially bring the value out of those situations. You've got this podcast, and you've got Jake and Gino. You talked about helping others, and I am the same way. And I have this, I don't know if it's human nature or what it is, but when I say I love helping people, and it's challenging because you see that so much in marketing. You see it so much. I just want to help people. I just want to help you. And then and then here comes the marketing funnel in behind it. So it's hard. I have this thing, almost like guilt, but I share that with you, Gino. I love helping other people. There was a book, I think it's called 7 Primal Questions, and mine is success. Like, my primal question is, am I successful? And that's pushed me in a lot of different directions, but it's also provided me the gift of helping others be successful. I want to see the best come out of you, Gino. I want to see the best come out of our conversation, our relationship. That's amazing. And you guys are doing this, Jake and Gino. Tell me a little bit about this 3-step framework when it comes to this sharing piece, this helping others that you love to do.
Well, we have 2 3-step frameworks, but I think the one that's most appropriate for the listeners, anyone who's a passive investor, that's where I started back in 2005. And that's where I guess my learning curve started back then. I was a passive investor. I invested with a gentleman, I'll call him Maserati Mike, pulls into the restaurant one day, nice gold Maserati. I'm like, bro, what's going on? He's like, I got a mobile home park deal. But he was referred from a friend. So he was a friend, the know, like, and trust. It's great to know, like, and trust until it doesn't work. I
Yeah.
knew him. I liked him, trusted him, invested in a deal. That deal went pretty good for about 2 months. Got a couple of checks. Got another mobile home park, put it on the contract. After 6 months, check stopped. After 18 months, money was completely gone, $172,000. And that was my journey where I'm like, you know what? I was pissed at him. I was really mad at him. He's a crook. He was probably, I wouldn't say criminal, but I would say fraudulent. He didn't know what he was doing. But when I really look back and I ponder it, it was all upon me. I was a terrible investor. I just gave somebody my money without understanding the vehicle that I was investing in.
Mhm.
And when I understood that responsibility, I'm like, wow, I have to teach others how to invest passively. And investing passively is not difficult. And in this 3-step framework, when you're investing passively, what most passive investors do, and I did this myself, we look for the deal. Where's the deal? I got to get a deal. No, that's the last thing you should be doing. The very first thing you should be doing as a passive investor is, where's the sponsor? Maserati Mike, what kind of sponsor is he? Has he ever done a deal? Have you done a background check on him or her? How long have they been in business? Have you spoken to any other investors that have done deals with Maserati Mike? You have to look at the sponsor first. We call it the jockey. Most important thing. That's the first thing you need to do, is to be able to vet the sponsor. The second thing, which I didn't do at all either, was what we call the saddle. The jockey sitting on the saddle. That's the alignment of interests. Are my interests aligned with Maserati Mike? Well, mine weren't, because Maserati Mike put nothing in the deal. I got all my scratch in the deal. So when that deal goes south, Maserati Mike is like, I'm going to get into my Maserati and drive off in the sunset, and you're left out to dry. There was no alignment of interests. He had no worries if that deal went bad, number one. Number two, do I know, or did I understand that my money was illiquid? It was an illiquid asset. I'm not getting that principal back for years. Is that okay? I mean, if I'm all right with that, okay. But does that align with my interests? What are my goals? Has Maserati Bank sat down with me and said, Gino, there's risks in this deal. And, I want to let you know up front, there's always risks. If this is the last $50,000 that you have to invest, this may not be the right fit for you. See how our interests are starting to align? So if you can align your interests with the investment that you're trying to accomplish with the sponsor, great. You've passed the first two parts. The third part is the horse, which is the deal itself. That's the buy right, the manage right, and the finance right. Those three components, if you look at it from that lens, will serve you so well as a passive investor, because it's not about the deal. It's about the jockey that's running the deal, and then it's about what you're trying to accomplish. Then ultimately, you can start underwriting deals and looking and see if deals make sense. The math is not challenging. It's not complicated.
Yeah. So I'm hearing, and I love that analogy. First time I heard it, I was spewing it out because I absolutely loved it. Vetting the jockey. So the sponsor, right? The first thing. And the second piece there was to make sure that your goals align with the jockey's goals, right?
Mm-hmm.
And then the third part is the horse, the deal.
Yes.
Awesome.
And Brett, what I would say, it's really challenging sometimes to vet the sponsor, because if you bought a deal in 2019 and you did nothing to that deal, net operating income could have stayed flat. You sold a deal in 2022, you would have made money because cap rates compressed, prices went up, no fault of your own. So you might be saying, hey, that sponsor, he's a great sponsor. Ask the sponsor, what have they done over the last several years with their net operating income? How much have they been able to expand it or increase it? That's a really important question to ask. And I think the other important question to ask is, just because a sponsor has been doing this for years and years and years, I would venture to say that I'd rather invest with a sponsor who has a little less experience, but has a lot of skin in the game. This deal has to work. They're going to put their heart, soul, and effort into it, rather than having a sponsor who's got a fund of funds or 30 different deals. And if your deal goes bad, oh, well. That's just something that I want people to understand. There's not one size fits all. You'd love to have a sponsor that's been doing it for 30 years. Obviously, I've been doing it for a long time. I've seen multiple market cycles, but just don't go with the sponsor just because he has got a great track record over the last 4 or 5 years, because a lot of people have made money in real estate over the last market cycle. Learn how to ask those questions that will make you understand if it's a good sponsor or if it's just a sponsor who's had luck over the last several years.
Yeah, and when you're vetting that jockey, just understanding, Which also brings another challenge too. It's like if I can bet the jockey and say, okay, how did you do in bad cycles? How did you do in good cycles? But if it's that newer one, I love that idea of, hey, how much skin do you have in this game, right? How attached are you to this deal? And as an investor, coming from the fix and flip side, getting into wholesale, like it was easy for me to run and gun when I've got no skin in the game.
Yes.
Right. But I also get offended when people ask that because my heart's in the game. I give this everything, right? And even though I may not have a dollar bill in this deal, I have hundreds of thousands of dollars behind me, pushing me, making sure that, hey, if this doesn't float, I don't float, right?
Well,
So I'm juggling that.
how you just said that though, you've explained to me as an investor, if I'm sitting there and I'm hearing you say that, well, you don't have actual money in the deal, but you're signing on some of the loan docs. That's risk. As a GP, I'm signing on loan docs. That's important. Also, the other thing, what are the fees? I mean, like something when I'm sitting down, I'm analyzing a deal and I'm a passive investor. Well, are there acquisition fees? There should be, because Brett needs to get paid. He's putting in a lot of work, a lot of sweat equity, a lot of experience. He has his whole entire team. He's putting the deal together. He's making this deal work. So he needs to get paid. Now, is he getting overcompensated? The only way you can tell that is if you go into the market and see what everyone else is charging. Look at the other fees as well. Are there asset management fees? There should be, but are they onerous? Are there disposition fees? Are there construction management fees? Are there refinance fees? As that passive investor, you need to understand the fee structure, and you need to understand if it's onerous, or if this general partner or Brett is out there just trying to get a deal because he needs to create fees to continue to feed the monster. And another thing in multifamily, I'd like to see that waterfall structure where if the deal does better, Brett gets paid more, but I get paid more as well. There's compensation. That's how our interests align. If Brett's making $100,000 on that flip, he's getting paid a little bit more, but I am also. If he's only making 50, he's getting paid less. That's something where you can put in those how our interests are aligned. You do better, I do better.
That's amazing. And this is multifamily, this multifamily world. I know we talked about Maserati Mike and I love that name. What a beautiful place. Although it's painful, 172,000 pinpricks all at one time for you. Maserati, I mean, you couldn't pick the better name to tell a bad story with.
The visual's true. It's a gold Maserati. I fell in love with the image of, hey, passive income. I don't have to do anything. A person with money, beats a person with experience. That person with experience gets the money, and the person with the money got the experience. And the worst part about it was, for years, I had to hear about it from my mom saying, hey, real estate's risky. You lost a lot of money. I have 6 children now. At the time I had 4. You've got 4 mouths to feed. And I'm saying to her, you know what? It's not real estate that's risky. I was the risky person. I didn't know what the hell I was doing. Don't blame real estate. And that's why for me, life coaching, I became a coach 10 years ago, revolutionized my life. Because then all of a sudden I started understanding, to become conscious, to become aware. At that point, I was the victim. And when you're in that victim energy, that victim mentality, you're blaming others. There's no solutions. Everything's a problem. When I saw the problem and I was able to step outside of that problem and see the opportunity, well, the opportunity was, it was my fault. And the opportunity was, if you want to get into this business and learn how to become a really good investor, go and learn from others. Success leaves clues. You're either going to learn in the classroom or you're going to learn on the street with Maserati Mike driving in his car. I already learned that way. That wasn't the way for me to learn. I needed to jump in the classroom and I needed to pay others for that education, Brett.
Yeah. Success leaves clues. That's also a line from my favorite, Mr. Jim Rohn, I believe.
I love
that. I think I'm still an advocate for Jim Rohn, like being a course in high school.
He's got that 12 Pillars book. I mean,
yes.
It's so simplistic. It's almost nauseating how simplistic and how easy it is. And if you inundate yourself with those messages, you surround yourself with the 5 people. I mean, you really take a stop and look. Are your 5 friends victims, or are they elevating you? And I'm not saying to get rid of your friends. Maybe you realize that they're victims and you become the one who lifts them up, who raises their state. And then you have the choice to stay there. Most of us don't even know that we have that choice, but at least having that choice and understanding, wow, the 5 closest people, I want to become financially free. I want to take my life to the next level. I want to transform my life. Well, are these people allowing me to do that? Not really. Well, then you have the choice to leave those five and to find five others. So I agree with you. I think his stuff is so simple. Him and Zig Ziglar were like icons. They are my two
Yes.
favorite speakers, I mean, ever. I mean, obviously Tony Robbins is amazing, but those two speakers, they were just, I mean, unbelievable for me.
Yeah. Yeah, it's amazing. Just again, I'm just full of goosebumps here today, but just those two alone and what they've done and how many people they've helped throughout their life is absolutely remarkable.
Mhm.
This idea of multifamily, and we're talking about passive, so these are syndication scenarios. Where do you find, or do you have inside of your education platform about the sourcing these deals? You know, you talked about step one of where are the sponsors. How do I find these sponsors, right? Because we all over once we get our email in these little threads or in these little groups, we're going to get bombarded with the best deals and the what I call the fluff formas, right? These big picturesque things that this area is so great and this thing is going to perform and we're going to do this. How do we find the sponsors? How do we find this deal source?
So for us, there's a couple ways for the listener to do it without becoming part of the Jake and Gino community. I want you to go on and I want you to just Google multifamily syndicators. You're going to get a bunch of them. And what I want you to start doing is start opting into their lists, whether it's Reed Goosens, whether it's Jorge Abreu, whether it's Robert Martinez. There's a ton of them. Start opting in and get their deals. Start getting their deals. And then from there, like you said, you'll see the offering memorandums. Now, that's why, to me, I created Passive Investor Pro. It's a program that we put together. It's an online training platform, but there's one-on-one coaching as well. And you get coaching calls with me, and you're able to come to our internal events. And the reason why you want to join a program like that is, I wish I had a program like that, by the way. You get the deal, you're able to underwrite the deal, you bring the deal to the coach. The coach will tell you, well, here are the numbers. You're trailing 12. This doesn't look realistic. Rent growth is not growing at 15%. They're able to poke holes, or they're able to tell you this deal on its merit looks like a good deal. The debt coverage ratio is right. They're able to tell you what to look at. And that's what I think is lacking right now. Because I think when over the last few years, you've seen so much money come into the market. And when money is free or the money is cheap, we're not really looking at these deals. We just want to be able to place our capital. And if we're responsibly placing the capital and you're understanding what that underwriting looks like, that's what's important. So go online, start opting into all of their lists, start opting into everyone that you can possibly get. And then, once you become a Jake and Gino mentor, in the mentorship group, we do have a bunch of people who are actively doing it. That's why I want to create this passive side. And by the way, Brett, Jake and myself, we don't syndicate deals anymore. We're not raising money from students. So this is purely just to teach people how to invest passively. And then when you're in the Jake and Gino community, they'll have access to people who are sponsoring deals and doing deals. So it's like a great marriage to have both of them in the same platform.
Yeah. And if you see any users named Maserati Mike, you should run.
Run. Don't run.
That's awesome. What would you say are the biggest, we've probably touched on them, but some of the biggest questions or concerns from passive investors who are just getting started in multifamily investing?
Great question. I think the first thing is you have to select your goals. What are you trying to accomplish? I think most investors just want to place money. Is your money coming from a self-directed IRA account? Those are IRA funds. That's more for retirement. You can't touch it. It stays in there, but it's great because it's long-term money. It's money that's sitting there that you can invest in a deal and forget about it for the next 5 to 7 years. Are you using savings account money? That money, you obviously have to have some money on the side, but are you putting some of the money from savings? Are you using whole life? I just borrowed money from my cash value for my policy today. We're closing on 2 deals. Where's that capital coming from? And then obviously that next question as a passive investor, are you looking to get into real estate full time through this passive investing? Or are you just trying to supplement retirement income? Or are you just trying to create some kind of passive income every month to pay the bills? Start at that baseline. I think that's really, really important. I think the next point is this conversation going on for a while, but I think the next one is select a market. I mean, try to pick areas in the country you can invest in. That's the great part about being a passive investor. You can pick different sponsors. You can pick different markets. You can pick different assets. You can buy an RV park, you can buy a multifamily, you can buy a 1980s build in Knoxville or a 2010 build in Austin. I mean, the sky's the limit. But the great part about it is you're sort of diversifying your portfolio. And then understand that you don't have to put all of your capital into one deal. You can spread your capital out, and you can even spread your capital out over time. That's what the amazing thing is. You need to create an LP team. Get on with a tax consultant, get on with a CPA, and understand the savings you get. A lot of syndicators are going to talk about cost segregation and tax benefits. You do get tax benefits, but not as if you're actively investing it. You're going to get some kind of, passive losses. If you have a passive business that's generating income, you can take those passive losses from real estate. That's amazing. So there's so many places to start, but start thinking about the markets, the sponsors, the assets. What I would do if I was a passive investor, choose one asset class. I mean, choose multifamily, choose, mobile home parks, choose self-storage, just choose one and become really good at it and understand that. And then, like I said, the market's next. And then once you're in the market, start learning that market, understanding where geographically you'd like to invest in that market.
Yeah, that's awesome. Great, great advice. It's very aligned with the way that I see it and the way that I always stand on my soapbox, even when somebody's not asking me. And that the goal thing, in my mind, I've related it to 3 C's. I've got capital, right? How much capital do I have to put in there? How much control, and how much commitment?
I would love
Right.
that.
So those 3 things, the commitment is the time, control is, hey, is this going to be liquid or not? And then capital is how much cheese you're playing with, right?
I like that.
So that's the way I've kind of like broke down over the years and say, hey, because my background is really started in the single family world, and that's a little more liquid where people want to be a little more active kind of deal, and the entry point, the barrier of entry is a little shorter. You can get in and get out. Mistakes are usually a little smaller. And I just really put that on there on that 3 C's. How does that affect? Does that fit into there? Or if you have limited one area of those, 1 C is more limited than the other, then that kind of will push you towards the LP spot, right?
Yes.
Yeah.
It's interesting. I'm waiting for you to get into multifamily. The next conversation.
Man, I am on it right now, man. I'm on it. So we've got some mixed use commercial, and I absolutely love them. But yeah, the multifamily for us right now, kind of starting out the 20 to 30 unit, because I'm active. I'm going to be active. And I love that. When I started with single family, it was the same way. I had the ability to learn and burn my own energy, my own money, and figure out that way. I've learned what I don't want to do again, basically. Yes. Right. So yeah, but speaking of that, what markets are kind of like standing out to you and to the students right now?
It's interesting. The Southeast, I think, is going to dominate for the next decade. That's my opinion. I mean, we see jobs going down there, and high-paying jobs. Where it was back in the 90s and 2000s, you had like all the college areas. You had the Bostons, the Chicagos, the Californias. They had really great high-paying jobs, but I think the cost of living got to be so expensive in those markets that people started shifting. They're going to Raleigh, North Carolina. They're going to Charlotte. They're going to Austin, Texas. Dallas. It's been a big shift. And now people are remotely working from home. I think New York City is going to get crushed. I think a lot of these markets are going to get crushed. I'm a little wary of Florida. I live in Florida. I think the coasts are a little bit more risky. I'd rather have people investing more into the central part of the state, to be completely honest with you. I think there's a little bit more value there, but I love the Carolinas. We're heavily invested in Tennessee. I think some Alabama markets are phenomenal. I think some of the Texas markets are phenomenal. Omaha, Nebraska, Tulsa, Oklahoma, these markets that are sort of below the radar of institutions, but there's still value. There's still populations growing. There's still stable jobs, and people can afford to live in these markets.
Yeah. I love it. And I'm hearing you on the Carolinas. We've relocated. I lived my entire life in Michigan, and now we're down here in the Carolinas, and I am very, very happy. So definitely where we're looking here in that, this the Sun Belt kind of area, and man, it's amazing. And talk about amazing. You've been an amazing guest, Gino. I just feel like we've clicked. We've got our goals are definitely aligned with helping others, but then vetting the jockey, making sure that we're, taking the fluff out of it. And hopefully we're all able now to see Maserati Mike when he sneaks up on us.
I always think about that. I'll leave you with this. The next time somebody approaches you and starts promoting a deal without asking you what you're trying to accomplish, I think you should just close the door and let Maserati Mike drive away, because it's always a sponsor like Brett or Gino. It's not what's in it for them. Let me leave you with this, which I think that this is even more important. I'm sorry, but I need to mention this. I started a business, the restaurant, to provide for my family. And that's not the reason why you start a business. You start a business to provide for the customer. And is that customer a resident when you're buying a multifamily? Is that customer an investor? So the Maserati Mikes of the world, or the Ginos and the Bretts of the world, we should be thinking about our investors. Does the deal, I don't want to have an investor if it doesn't align with my deal, because that investor is going to be a difficult investor. If that investor is looking for short-term money, get out in 18 months, looking for quick velocity, he's not going to be an investor of mine. It's not going to be a fit. You know, Ian Altman says it best in his book, Same Side Selling, find impact together. That's what you're ultimately trying to do. You're trying to find impact with your customers. And I think if you can do that, you can align yourself, you will be one hell of a jockey.
Man, find impact together. And that is amazing. I hope that this is just the start of a relationship that we have, Gino. I mean, this has been a great conversation. I know that the listeners have just gleaned so much value from this. And I want them now to go and find you at jakeandgino.com. That's the best place for them to connect with you, right?
Yep, jakeandgino.com.
Beautiful. And what is this? What's the name of your podcast too?
It's called the Jake and Gino Show. We've got a couple of shows on there. We've got a how-to on multifamily. We've got our movers and shakers, where our students are doing deals every 2 weeks. We launch a new show with our students, because I think it's important. I mean, I think people need to know that there's challenges in real estate, but there are people doing deals out there. If you're hanging out with people who aren't in real estate, they're going to tell you it's risky. Obviously, they've never done a deal before. You need to find people who have done deals. Ask those people what's going on in real estate.
For those of us that love helping other people, I just want to bounce back to this association idea. So sometimes in order for us to expand association, we need to de-associate, right? Pull back the association with other people. I don't think de-association is the right. Disassociate. There it is. Right. I have to remove myself from certain circles. And like you were saying, it doesn't mean that you can't be friends with them, but you're the average of the 5 people you spend the most time with. Make sure that you're surrounding yourself with the right people, because if you're not and you like helping people, guess what? If I'm in the weeds and these weeds are over my head, I cannot see to help anybody else. I have to spend that time and invest in myself to raise myself above the weeds, so therefore I can start helping other people. And I think you've done this in your past, in that journey from the restaurant world, working with your father, and that self-realization change that you were able to take. Because I know, just like when we spoke about Jim Rohn, Zig Ziglar, even Tony Robbins, all of these guys have helped so many people based off of first them helping themselves, clearing their minds and focusing on themselves and not blaming other people. So grateful that you had that opportunity, that experience, and now you're sharing that with other people, Gino.
Thanks, Brett. And, let's just end by saying, if a pizza guy and a drug rep can do it, anybody can do it.
Yes, absolutely. Thank you so much for your time, Gino. It's been an absolute pleasure.
Thanks, Brett. I appreciate it, brother.
Awesome. And the listeners, thank you for your time. And as always, thank you for your attention. Without your attention, hey, time is just wasted. And we want to make sure that we're enjoying our time along the way. Be focused on who you're giving your attention to. Make sure it's going to your family and to that select circle of people around you. And that'll enable you to be present in the moment. Enjoy the journey. Check out Gino at jakeandgino.com. Get on the podcast, get in this 3-step framework. It is amazing, because when we live our life by design, that's exactly where we're supposed to be. This is a Real Estate Mogul MD.